Hello, everyone. Welcome to today's episode of The Daily Dose. Today is Wednesday, October 12th, and there's really not a lot of new things for me to go over in this video, so it might be a little bit shorter than usual, but I'd rather give a shorter video that only has good information in it than drag it out and just have it be filled with fluff, because that would be a waste of your time. So this one might be a little bit shorter, but I'm sure after the CPI comes out tomorrow, I will have a lot to talk about, and that one will probably get split up into 2 episodes because I'm going to be traveling for a wedding on Friday. So part 2 of Thursday's episode will probably come out on Friday and serve as that episode for the day. But before we get into it, I just want to say, if you like this type of content, to subscribe on YouTube and follow wherever you listen to podcasts. One of these episodes will come out every day that the market is open, and over the weekend I release a longer episode that goes a little bit more in depth on the week and what's going on, and it's just a good way to stay up to date on what's going on. So let's talk about today. The markets were mixed. It was a little bit choppy today. Really, what the market was looking forward to was the CPI that comes out tomorrow. We did see the producer price index number come out today, which was a little bit higher than expected, but the market didn't really react to it too much. I think investors and the market in general is really looking towards this CPI for guidance, because that's really been the benchmark that the Fed has been looking to as far as their plan goes. And I think that we're starting to look for, at least we in the sense of the general market, the broad market as a whole, is looking for that number to start to come down. And that maybe it coming in at 0% month over month might not be good enough anymore, because it's going to take a while to get back to the 2% target if it was just 0% month over month. For context, if we finished the last 3 months at 0% month over month, we would still be over 6% year over year, and that's over triple the Fed target. So that's really what investors will be looking at tomorrow, and I'll get a little bit more into that in just a second. But the PPI came in today, and it was expected to rise 0.2%. It rose 0.4%, so not a huge difference, but it did come in higher than expected, and it did rise month over month. So I think the expectation as of right now is that the CPI will come in lower, that it'll be below 0. The expectation is 8.1% year over year, so the market is expecting it to fall. And that'll definitely be big. If we take a look at the charts, which is what I want to do actually, we can look back to last month right here. So last month, we rallied really, really heavy into the number. We were actually sitting right on a point where we thought there might be some selling pressure anyways, regardless of what was going on with the CPI. And we said that there were some synergies right here at this level that could cause selling, and that if the number disappointed, it could be a little bit of a trap for people that were getting bullish right here. And that's exactly what happened. So the number came in hotter than expected, and that indicated to the market that the Fed's going to continue this tightening cycle, and that they're going to continue to be aggressive. And we saw a big sell-off there. And we're not in the exact same place as we were last month, but we are at a level here where we've seen the market show some weakness. So originally, when we came back down to these lows from June, we broke below for a day and then went above. We talked about the island formation here, and usually that's a pretty bullish signal. It can indicate a relative bottom in a market when you have this gap down into it, and then you create some structure, and then you gap out of it. But that's not what we saw. We actually saw the market come back down, and now we've retested in intraday. We've retested this level that stood in June, and now we've kind of bounced off of it. If we zoom in, we actually did go lower yesterday during the day than we closed today. So it's not a new low, but it is a new low as far as closes go. So the intraday low is about 35.67, but the close today at 35.77 is the new low for this market as far as daily closes go. So we're looking weak. I don't have any insight as to what to expect from the CPI as far as whether I think it'll disappoint or beat expectations. But what I can tell you is that if it comes in hotter than expected, I wouldn't be surprised to see this market sell off some more, because that's what we've seen in the past throughout this bear market. And I did go ahead and map out the zone that I've referred to in previous episodes. So in the event that we do have another leg down, this is the area that I've mapped out on my chart to where we could see some real buyers come back in. And I'll go ahead and go back to where I actually pulled that from so you can have a little bit of context. And so this is where I pulled that level from. So back in September and October of 2020, if you can remember back to that market, it was a much different one than the one we are currently in. We had this big correction here following us bottoming. So this was a little bit of a correction right here, but this was the biggest one that we had following the bounce after that low in 2020. And we actually formed a nice little double bottom here. So we had a big correction in that market. We found some support on this level. We rallied. We came back to it. We bounced off the same level. And then the market went into a channel after that. And I don't have it on my chart anymore. But if you can imagine with me here, and for those listening, I apologize for not being able to see this, but you can still get the idea of what I'm saying. So the channel line would have been up here, and the market basically followed that channel line all the way up, and similarly the trend line. So it was in a little bit of a channel, and it actually was in that channel until we started this bear market in January of this year. So for those of you listening to the podcast and not watching on YouTube, basically this level that I've just picked out was the area where the market found support for that double bottom back in September and October, actually all the way through November of 2020, and then we went into that channel. So this is a big level for me, and that's what I mapped out as the next one for us in this market. So as far as numbers go, the top of that is 32.93 and the bottom is 32.15. So basically 32.50 is like that middle level, that magic number, that even psychological level that I think the market could be looking to. Let's say we get another big leg down, that's where I'd expect the next level of support to be at, serious support. So maybe this episode will actually be normal time. But yeah, that's what I'm looking at. Again, I don't think there's a lot to look into as far as today's price action went. It was really choppy. It's definitely better than going down 1.5-2% today. But I think that it really depends on what we see tomorrow, and that what happened today at the end of the day won't matter, because the underlying data is what's going to matter. So before we leave, let's talk about Bitcoin. And if you are listening to the podcast, I do suggest maybe watching the video just for this one so you can see what I'm talking about. But we've had this trend line on Bitcoin since November of 2021. And I mean, every single day it just follows the trend line down. So it hasn't been able to push through it yet. And now we're sitting on the top of this level right here at the 19,000. On Bitcoin, obviously there's a whole range where it's gone since we've been here since June, and we've gone as low as the 17.7. That's why I have it mapped out like this. But again, I say it every day, but I'm going to continue to say it every day until we see a change of trend here. Either we're going to break through this trend line, and this will be the bottom, which for me, I don't expect, because we've been here for like over 4 months now, and typically the crypto market doesn't give you 4 months to buy the absolute bottom. So I'm not expecting this to be the bottom, but I could be wrong. Again, do your own research before you make an investment decision. But more realistically, this 17.5 to 17.7 level is the last zone of support until we could see a real leg down on Bitcoin. Again, that would put us between 12,000 and 9,000. And additionally, that'd put us right in the sweet spot for a crypto winter. Typically, those are anywhere between like 80 and 87%. I think the exact number is like 84 to 86% is the average crypto winter for Bitcoin. And that would put us right in that range. So that's why I'm kind of looking at that level. I'm not just some perma bear on Bitcoin. I love Bitcoin as an asset, but you have to be realistic with yourself as far as this stuff goes. So that's what I'm looking at on Bitcoin and the stock market today. Sorry. But again, tomorrow will really be telling for what the next couple weeks will look like. Be sure to stay tuned for tomorrow. I'll release an episode tomorrow after the market closes. It might be like an hour or two after the market closes, because I'll be landing about an hour after it closes, 30 minutes-ish. So I'll need some time to gather my belongings and record, but there will be an episode that will come out tomorrow and Friday. And then this weekend, I will be sure to get the weekly wrap out to you as well. If you haven't watched this past weekend's episode, be sure to do that. It was a good one. But yeah, until next time, I really appreciate you watching or listening to this episode, and I'll see you in the next one.